Hey guys, this is going to be a simple video on morning versus afternoon strategies that I use for day trading in the market. Pretty much just going to be looking at the S&P 500 here and going over my top three choices for morning style trades and then my top three choices for afternoon style trades. Taking it off with the morning trades, one of the first common trades that I'm sure a lot of people take is the gap fill trade. All right, whenever the market opens well above or below the previous day's close, you get a gap, and a decent amount of the time, the market trends towards that gap fill, even sometimes intraday. Now, there are a few tips and tricks that I have for these gap fills. The first rule is if I see a gap that's over 0.5% on the S&P 500, I typically don't try to play the gap fill. All right, because that is just too much of a large gap. This is a scenario right here, as you can see, on February 13th, where you gapped up just about 0.5%. And that's kind of like the max limit I would use for playing that gap fill. So if I were to see the market gapped up over here and I wanted to trade the gap fill, let's say with puts, and I wanted to see the market drop, first of all, I'm going to be looking for a nice break of structure. You see that you broke the 9 EMA, which are these little gray circles here, and the VWAP right over here with the bearish engulfing candle. I probably wouldn't just get right into puts right over here. I would wait for a bearish reversal. So let's say in hindsight, I would have entered puts over here with that break of VWAP, bearish engulfing candle, and played the gap fill. The first thing I would have done is placed my stop just above VWAP. So if at any point the market or the S&P 500 trended above the VWAP, I probably would have stopped out. In this scenario, it did not. And then I also like to take profits, not literally right at the gap fill, but maybe 0.05 to 0.1% away from the gap fill. As we can see, this actually literally didn't fill it. It got about 0.07% away from filling it. So I don't wait for the literal gap fill, because sometimes people that do wait for that, they never take their profits here and then it never actually fills it. So remember that 0.50% rule. A good example of that is actually today, where you gapped up slightly over that 0.50%, very similar to the first day. And that's why the 0.50 is kind of that literally 50-50 area, where if it's a 0.50% gap, there's a 50-50 chance it might fill. And I'm not saying literally, I'm just saying in my mind. You can go look at the statistics yourself. But usually I'm looking for like gap ups or gap downs that are less than 0.5% to trade them. So on a day like today, you can see you only went halfway back down. You did not fill the gap. So remember, those large gaps are going to be harder to trade. Moving on to the next morning strategy, it's the simple VWAP strategy. So let's go and look for a good day. Today was kind of choppy, but there's going to be a lot of days where you trend pretty much around the VWAP, okay? So this is a great example right over here. So the market gapped up, as you can see. And if we take a look at this gap, just to talk about that last point, you can see this was way above that 0.5% rule that I just gave you. And therefore, that gap did not fill. That does not mean if the market gaps up or down less than 0.5%, it's always going to fill. I'm just saying that's a small rule I use, because typically, if the gap is larger than that, there's probably a lot of news behind it, and it could be a strong move for a reason. But forgetting about the gaps right now, this is a great example of the VWAP trend, where let's say I see that the market pretty much opened, was above VWAP. The first time that the market breaks above or below the VWAP on a trend day, so this is an example of a downtrend day, I can just get into puts and I can remain in those puts and even potentially keep adding to the puts every time it retests the VWAP or gets close to retesting the VWAP. And that's how you can play a trend day. And then you stop doing that if it breaks above the VWAP. So the opposite of this would be, imagine that the market was down, right? And it started moving higher. And then pretty much if you got above the VWAP, right? If I were to literally just flip this chart, if you got above the VWAP, just add to calls every time it gets close to it. And as long as it doesn't break it, you just play that trend. So VWAP trend is another common strategy I use. Those are much better for like straight trend days. And usually you can tell that around like 1.5 hours to 2 hours into the day. The final strategy for the morning trades that I take are simply, let's go over to the 1 hour time frame now, the previous day high and lows. And it doesn't just have to be like literally, like, let's say you're trading on a Wednesday. It doesn't just have to be the Tuesday high and low. I'm just looking for the past couple of weeks, where has the market been seeing higher highs, where has the market been seeing lower highs, and looking for those levels to break. All right. Vice versa, it works in both directions. So an example over here would be this 5180 level on the SPX. You can see it rejected on March 8th, it rejected on March 12th and 13th, it rejected on March 18th. So just seeing this already, I would have set up a price alert right over here that if it were to have broken above that level, I would get an alert and I would consider going long there. So I'm really looking for the past 2 to 3 weeks, and I'm setting up price alerts on my charting platform for any areas where the market consistently is rejecting at the high of the day or the low of the day. And this is really the key. A lot of beginner traders you see, they only use the one day before to mark their previous day high or low. I'm looking at multiple days where you reject the same level or bounce off the same level. A great example of bouncing would have been over here at this 50.92 level where you're bouncing off of it. So that's another key thing I watch for the morning trade. Let's talk about the afternoon trades, but before we get into that, I want to give a quick shout out to our sponsor, Public. Public recently launched options trading on their platform. It is easy to sign up, and trading options on Public is commission-free. There are no per-contract fees. They have an options hub where you can explore actively traded options and so much more. What makes Public different is that they're actually sharing 50% of their options revenue with you, meaning you get an 18-cent rebate back for each contract you trade. This 18 cents is expiring March 31st. So make sure you sign up by clicking the link in the video description and activating options trading on Public before March 31st, 2024 to lock in your lifetime rebate. Now back to the video. All right, now let's talk about the afternoon strategies. I have 3 simple strategies here. The first one is the wedge strategy. You cannot really get this in the morning when you're looking at a 5-minute chart, at least for the first few hours of the day, because for a classic wedge, you want 4 to 5 touches, and you just don't have enough data on the current session to have that in the morning. So a lot of these wedges you see develop in the afternoon, typically they actually, if you think about the psychology of a wedge, they're developing during low volatility. You can see that the price is moving, it's kind of contracting closer and closer together before an eventual breakout. And sometimes towards the end of the day is when you get that breakout. So this is a great example of a downtrend day where you got a wedge in around 1:30 right after lunchtime, and the first 4-hour candle of the day closes. You got that nice break, and then a simple target could have just been a move back up to VWAP because you saw it was rejecting VWAP the whole entire morning. The next afternoon strategy is going to be a new high or low of day. So this is a little bit different than looking at like the previous day high and lows like I was just talking about. This is on the same exact day whenever you make a new lower high. Sometimes it's in the afternoon that you do so, and it can be a very quick trade. Like literally the whole entire day you were bouncing off this 51.54 level, and you only broke it in the last 10 minutes of the day. But this still is a decent drop. Like you fell about 0.1%. That could be a decent amount of money, especially with options. Even though I don't really trade options in the last 10 minutes of the day, but just for an example, it's a pretty decent drop into the close, and it's setting up a simple alert, like I said, could have gave you that little heads up. The final strategy for the afternoon now is going to be the classic power hour reversal. And it can work in both directions. Right now, I'm going to show you a downside example, but it's simply looking until pretty much around 2:45 Eastern time. You see there's a simple trend going up until about an hour and 15 minutes before the market closes. And then you see some signs of a reversal, or you're approaching an area of supply. Like for an example, you can see that there was supply here from the Thursday. Prior to that, there was some supply here from Friday in the morning. And then you ended up breaking it. Then you actually retested the same level. You could have even kind of charted out like a little bit of a bear flag, for an example. Bearish engulfing break of the 9 EMA. You just look for the classic reversals setups when you're having a simple trend into the last hour of the day, and then this could have been a nice little short trade into the close. So those are the afternoon setups. I hope you enjoyed the 3 morning and 3 afternoon setups in this video. Again, none of these are foolproof. Always practice risk management, and hit the like button, hit the subscribe button. Another quick shout out to Public. Make sure you sign up by March 31st to lock in your lifetime rebate. Sign up using the link in the description, public.com/championvibe, and I'll see you in the next video.